Okay, I mean, I'm mainly going to deal with macro. I'm mainly going to deal with, well, you probably know what I'm going to deal with, the same thing everybody else is dealing with. Something unusual happened this week. This guy, he's so cool, isn't he? This guy who most people didn't think was going to win an election managed to win an election. That's created some extremely unusual movements in the market. Some of the intermarket movements don't really make a lot of sense. I'm going to go through that a little bit, and basically where I think things are going from here, because I know, by the time we get to Friday, people were getting pretty freaked out. I think that's the general reaction of most of us, and I certainly share it. Right now it's all about the Donald, it's all about the dollar. Although the dollar is really moving because of movements you're seeing in other markets, and I would say most importantly probably the bond market. The interesting thing with that chart, if you look on the right side of it, and you'll see this on all of the charts that come up here, the 24-hour swing during the night of and the day after the election is unbelievable. I mean, that is unbelievably large volatility for the world's biggest currency. It's insane that you had that much of a move in a 24-hour period. And I've got a couple of ideas about this, and they're going to sound like conspiracy theories, so I almost don't like to bring them up because I'm not a conspiracy theory guy, and it isn't really conspiracy would imply it's secret, but I don't think it is. But I've got a couple of ideas about what might have happened here. I mean, basically, the argument for the trading in the last 3 days is, to put it in the simplest terms, a Trump freeflation trade. The assumption is, the one piece of his legislation that I'm fairly comfortable he's going to push through is going to be a huge tax cut because, well, it's really good for him. So I'm pretty sure that one's going to happen. He started talking somewhat to people's surprise, I think. It was something he brought up during the campaign, but he really got on the bandwagon with the infrastructure spending, which I happen to think is a good idea. I mean, the irony is not lost on me that it was a bad idea when it was the Democrats talking about it, but now it's a great idea that it's Republicans talking about it. But nonetheless, I think the bond market looked at him talking about, doing big spending programs, being fairly comfortable he was going to force through probably a very large tax cut, probably right at the front end of all this. It's not hard to do the math to see what's going to happen here. I think it's safe to assume deficits are going to explode in the U.S. And the bond market took one look at that and turned tail. And again, this TLT, it's basically the 20-year yield ETF, or the 20-year bond ETF, sorry, this isn't the yield ETF, it's just the price ETF. Again, that move is crazy. Like for a 2-day move, that is unbelievable to see. This is a very, very big market. To see a market like that shift that much in 2 days, we're talking about incredible amounts of money getting moved around. Same thing again, and of course this is a gold chart, which is the thing that you're probably the least happy about if you're sitting in this particular audience. There's a couple of things I want to mention here is that before the election, I think it's safe to say that the pollsters got it wrong. I think it's also safe to say the mainstream media, you'd be very hard pressed to have found anybody that really thought Trump was actually going to win this election. And what that meant was the positioning was, I think, very one-sided before the election. I mean, a lot of guys were long gold. A lot of guys probably had short options on the S&P. And as soon as those numbers started coming in the wrong way, there was basically panic. I mean, people freaked out. I mean, I don't know about you, but I was watching the returns come in, and the speed at which the S&P dove, and it was limit down. I mean, 5% as far as you can go in one trading session. That thing was limit down in about an hour and a half, which is pretty amazing. It's a big volume trader, that contract. Gold was the same way, of course, in the opposite direction. It was up 40 or 50 bucks in the space of an hour and a half. And I've been trying to figure out, what turned it around. Because really things started to turn, they actually started to turn a bit even before Trump did his acceptance speech. And I'll give the guy credit. He did a very good, calm, rational acceptance speech, the type of thing I think we were all afraid he wasn't going to do. He definitely stuck to the prompter. Somebody read him the Riot Act, and he was smart enough to listen. But, I saw an interview a couple of days ago with Carl Icahn. And I hadn't really thought about it until this morning, because Carl Icahn is a huge guy in the market on Wall Street. He's multi-billionaire. He's 20 times richer than Donald is. Maybe 100 times richer. Who knows? Never saw his returns. But Icahn is he's a friend of his, and he's one of the few guys that actually wrote big checks for his campaign. And during the interview, he said, I was at Trump Tower when the returns were coming in, doing the celebration with everybody, and he said, look, I wasn't that confident. He said, I read the same polls everybody else did. Didn't look like he was going to win. He said, most of the way through the evening, when I got to the point where I was essentially very confident that he was going to get 270 electoral votes, he said, I left the celebration, went back to my office, put $1 billion into the market. Now, even for a guy like Carl Icahn, $1 billion is not chump change. And the person interviewing him kind of went like, okay, that's like a plug number to sound impressive. And Icahn's answer was, no, that was as much money as I could push into the market during that period. That period would have been 1 a.m. New York time, probably for the next 5 or 6 hours, relatively thin trading internationally. When I look at things now in retrospect, I got a feeling Icahn's the guy that probably turned the S&P index futures around. I mean, $1 billion is a lot of contracts. Even with the way that thing trades, he may well have turned it himself. And once it turned, the Momo guys come in. There were guys positioned on the wrong side of that. There were guys positioned on the wrong side of gold. I mean, as I'm sure most of you know, a lot of people in the gold market were concerned about relatively one-sided long positioning in the market was making a lot of people nervous. And I think you just saw a snowball effect here in the last 3 days, where once that turned, the Momo traders started. These guys were closing out positions like crazy. We won't know until the end of next week. This week's I didn't even look at this week's COT report because it'd be useless because the cutoff is basically halfway through Wednesday. What I want to see is what things look like at the end of this week or early next week. But I think we're going to find that the long positioning in the gold market has gotten way, way more balanced than it has been for the last year. In other words, it's a market we should be a lot less afraid of than I think a lot of us were getting nervous about how one-sided it was on the long side, and I'm pretty sure that's not going to be the case. And one thing, if you look at that oval on the bottom right of that chart, those are massive trading volumes. Those are really, really big trading volumes. I mean, somebody pushed a lot of paper those 2 days, and I'm assuming some of this was guys closing out long positions. Maybe there's guys opening shorts, but to me, this feels like something there's technical damage done, so this could go on for a little bit longer. But the thing is, this feels to me like something that's almost washed itself out already. I don't know how big the bounce is going to be, but my gut feel is it doesn't go a hell of a lot lower. It's very, very oversold, just in terms of how much buying and selling there is. Market internals, bonds are extremely oversold, gold's extremely oversold. I mean, the one bright thing this week, and I'm sort of two minds about this, to be honest. The base metals, of course, copper in particular, I mean, it basically went vertical. I mean, that chart's crazy. Again, some of this was guys latching on to the Trump infrastructure spending thing, but I think it's worth noting, and in fact important to note, it's hard to tell on this chart, even looking at it at that scale, but that move started before the election. I mean, this move really started in Shanghai. I mean, it's been floating around for a couple of weeks that copper, iron ore, met coal, rubber. Why rubber? I have no idea. There's 5 or 6 commodity markets in Shanghai that just sort of became a thing in the last month or two, and there's a lot of spec money, and there's a lot of gamblers in China, and those guys jump on a market, they can really do a lot of damage, and I think that really started this push. And then I think after Trump's win, I think guys looked at this chart that was already moving. It had already been up several days in a row, and they just jumped on that momentum, and it just totally went crazy. But again, if you look at the last day, it's hard to tell, but you take a look at where the close is there at 251. It went up to like 273 on Friday. I mean, that kind of looks like a blow-off to me. So although I have no problem with copper, obviously, and I'm quite comfortable with zinc, you got to be a little bit careful in the next little while here, because these markets are totally out of whack. I mean, there's nothing rational about what happened Thursday, Friday. This is total sentiment, crazy ass buying. So you got to be careful not to be chasing this stuff, and like give it a chance to kind of settle down a bit. You know, so on the gold side, I mean, I've talked to a lot of unhappy campers in the last couple of days. You know, are we done? No, I don't think we are. Gold bonds extremely oversold. You know, one-sided positioning, both those markets is probably done. I mean, I think bonds have probably got more downside. I mean, this is something that everybody's been expecting for 3 or 4 years, frankly. Everybody knew the bond market was going to roll over at some point. When you get to zero interest rates, it's really only got one way to go. I mean, this had to happen eventually. The question is how deep it is. But this is, you know, this is classic market euphoria. To me, it already feels overdone. You know, there's two or three or four things you have to keep in mind. One is the U.S. system, the way it works. He's not inaugurated for a couple more months. I think it's very much, I think the jury is still out on exactly how much of his platform is going to come into play. You know, let's keep in mind that, you know, for all of his faults, and he's got a lot of them, the guy's an outsider, and he's not that well loved even by the guys running the Republican Party. So I think there's going to be a lot of behind closed doors stuff going on over the next 2 months in terms of how much of his program exactly gets put in place. Like he made comments yesterday about Obamacare. You know, maybe I'm not going to dump that, which I'm sure had most of the Republican orthodoxy flipping out. But I mean, this is Trump. I mean, he's at the end of the day, he's going to do what he wants to do. But he does have to get it through both houses. The other thing too is that if you look at the way that equities traded, the way gold traded, the way bonds traded, there's two things being assumed. Three really. One is that you're going to see a large growth increase. I hope they're right, but there's really no evidence for that yet. I mean, it's going to be a while before we know whether that's really the case. The other thing that they're assuming, inflation trade, I can kind of buy into that, given that if he does what he says he's going to, deficits are going to explode. The third thing, and this is the far and away the most bizarre to me, is the way bonds and gold in particular are trading. There's an underlying assumption that we've entered a lower risk paradigm with Donald Trump as president of the United States. Like, are you kidding me? Like, okay, like, give the guy credit. He's done a great job the first few days. I mean, he's been very measured. He's stuck to the script like he literally has. You can see him staring at the prompters. You know, good on him. But I mean, this is Donald Trump, folks. I mean, he's going to put his foot in his mouth. Is it going to take a week? Is it going to take a month, 2 months? I don't know, but it's going to happen, guaranteed. So I think this whole view that somehow we're in a less risky environment is completely insane. It makes no sense to me. So now what? Well, I mean, there has been, on the gold side, let's stick to that for a minute, there has been significant technical damage done. I'm not a chart guy, but most of the chart guys I talk to say, you know, don't be surprised if it comes off a little bit more. People are watching 1200. According to the chart guys, they tell me 1200 isn't strictly speaking an important level. It's more like 1180. I think 1200 is probably important for all of us because it's psychologically, I think it's important that it stays above that. You know, personally, I wouldn't be surprised to see it bounce as early as Monday morning, you know, Tuesday, but maybe Monday morning. This is such a stretched move on Thursday and Friday. Those kind of moves generally don't last that long. They tend to peak out pretty quickly. You know, bonds, I do think, you know, we've probably seen the rollover. They're also very oversold, but I think the general direction probably isn't wrong. I mean, I think inflation's probably going to go up. I don't think it's going to go up a lot. I do think the jury's still out on that. But, you know, the bond market was so one-sided that it's not that surprising that we're seeing this rollover. People have been calling for this rollover for 5 years now, so there's nothing really shocking about it. But I think, you know, the way the markets in general reacted, I mean, it was like the ultimate honeymoon when this guy got elected. You do tend to see the market react well to elections in Wall Street, regardless really of who gets elected. I mean, there tends to be this honeymoon period. This is particularly a cute one, but, you know, do I think it's going to last? Not really. I mean, the guy's on his fourth wife or something now, so I mean, generally Donald's honeymoons don't last that long, and I got a feeling that's going to be the case here as well. So basically, you know, gold gave up its post-Brexit gains, but, you know, really we're back where we were, you know, early summer. I mean, this isn't something we shouldn't all be looking for a window to jump out of. It's not the end of the world. And I think the basic, you know, my feelings haven't changed about the basic reasons why we're in a renewed bull market. I still think it's, you know, negative interest rates as an underpinning. Short term, we don't have those. With the move we saw in bond yields in the last 3 days, real rates went positive, but you got to remember that the market reacts far more rapidly than the economy does. The market tends to get ahead of the economy in both directions. The market's already reacted as if there's been this inflation move. We won't see, and even if there is, even if that's going to happen, we won't actually see it in the metrics. We won't see it in the econometric reporting for 2 months or 3 months. It's going to take time. If that does happen, you're going to see negative rates go back. I mean, December, I thought the Fed increasing rates was baked in the cake anyway. I think it's 100% baked in the cake now. I can't imagine why they wouldn't do it. The market's already pricing in a move and a half. So if you're the Fed, there's never going to be a better time to do it and not have any consequences. So something really strange would have to happen for them not to raise rates in December. But again, I think that was sort of baked in. The bigger question is going to be how, what do they do? What do they do next year? Are we going to see a series of hikes? One thing I'm going to be watching when the December meeting comes around, because it's a quarterly, is let's see if this has moved their dot plots and anything. Has this election changed their feelings about how many rate increases we're going to see over the next 18, 24 months? Because that's really what's going to define whether we get a positive real rate curve, and that's going to have an impact. If this semi-euphoria continues, we're probably going to have a much better market for base metals than we probably would have expected, because those are definitely back on after last week. I thought that was coming anyway, but it's definitely being accelerated by this. And basically, again, this is a 5-year. This is basically inflation expectations. Is 5-year forward minus a 5-year inflation break-even bonds. You can see how much of a move that was. I mean, that's a big part of what drove this, is the assumption that he's going to run deficits through the roof. If you want to go back and think about when's the last time we saw a guy come in whose game plan, implicitly or explicitly, I mean, he's a Republican, he's not going to say it explicitly, but it was there implicitly, that they're going to basically blow the deficits up. The last guy to do that was W. I mean, his platform was coming in and doing an immediate income tax cut, which he did, but he also had a lot of spending plans, which he carried out. He really blew up the deficit, and he also presided over a real move up in interest rates after the lows in 2000. And I think if you take a look back at the gold market from 2001 to 2007, I don't think it's, some kind of a replay of that is not going to be something that's going to make anybody in this room upset, I'm pretty sure. And it's basically the same paradigm. I don't see this whole bonds drop and gold drop. And that, by the way, is just, without belaboring it, that's extremely weird, unusual, and rare to see moves in the same direction at the same time by the bond market and gold. Like, intuitively, it makes no sense that you'd be selling bonds because you're worried about inflation and selling gold. That's a very, very unusual combination, which is part of the reason why I think a lot of this is just unwind and Momo trading that's going to blow itself out fairly quickly. And I'll be sending a copy of this to everybody, like literally everybody that's registered. I'll send all of you a copy, because this is not on the thumb drive. We'll send Gwen's too, because there isn't a thumb drive either. Basically, I'm expecting a bit of a pullback. I mean, we saw a little bit of a top there on the copper chart. I wouldn't be surprised to see that still come back a little bit more. I think it got ahead of itself. Might be a little more downside in gold. I mean, I'm watching 1200 like everybody else. Just, if nothing else, it's psychologically important. But I got a feeling this violent down move we've seen starts playing itself out, and in fact we may have seen the worst of it on Friday. A lot's going to depend on what comes out next week with transition team and whether Trump says anything crazy. I mean, the usual stuff. The guy's unpredictable by definition, so who knows? But I don't think it's going to get a lot worse. This tends to be a slow period anyway. I mean, I think there's a good period here to be set up for maybe a bit of tax loss selling, and then this market, this sector tends to have good runs from early December till March, April, depending on the year, sometimes longer. I got a feeling we're probably setting up for that, but keep in mind we're almost halfway through November, so I mean, I don't think the bargain hunting time is going to last that much longer. And that's just the usual marketing blah 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 blah. We won't bother going into that. I'm going to try to keep on time here.